Welcome to the Power on Heels Fund Incorporated as we present this virtual masterclass as part of our series of the COVID-19 Financial Summit, Reestablishing Financial Security, AIM, the Crisis. I am Ivette Mayo, the founder and CEO of Power on Heels Fund Incorporated and the CEO of Yo Soy I Am LLC. Power on Heels Fund Incorporated is focused on minimizing the impact of gender pay gap inequity and the advancement of Latinas in the marketplace by providing specialized training programs, mentorship, and scholarships that are designed to enhance the earning potential, accelerate professional growth, and cultivate future leaders. Stay connected to Power on Heels on all our social media platforms, and please visit our website at poweronheelsfund.org. Stay informed and stay plugged in. There you can have all the information on our current events and all our efforts. The COVID-19 Financial Virtual Masterclasses are filled with industry experts and change agents sharing information to help you create smart financial strategies during these difficult times. Following reliable information and sound fact-based advice will go a long way in helping you achieve your financial goals. Remember, your financial mastery is about how you live and lead.
Hello.
Welcome to this masterclass, Veronica Martinez, VP of Mortgage Lending at Guaranteed Rates and the immediate past president of NowRep Houston. Veronica.
Thank you so much to Power on Heels Fund. Thank you, Ivette. Thank you, my friends and familia, for having me today. It's such an honor. Again, my name is Veronica Martinez. I am a VP of Mortgage Lending. I'm a loan officer with a mortgage company called Guaranteed Rate. And I am so excited to bring this information today. I know that normally I teach classes for families that are looking to buy a home. Today, I have the opportunity to really touch on, to connect with each type of potential homeowner, whether you're a current homeowner, you're a potential homeowner you're looking to buy, or even if you're looking to invest. So whatever it is, whatever place you are, whatever season you are in life, you're going to walk away with something that will help you to achieve even more financial freedom through homeownership and through real estate, which is something that I'm really passionate about. Just a quick overview. I've been in the business about 15 years. I'm so excited to celebrate my quinceañera this year. It's been a wonderful journey, and I love that I get to bring this information to you today. So let's get started. Why are we here, right? Right now through COVID-19, the experience for everyone has been different. Some folks, it's been a crisis. For others, it's an opportunity. I want to bring information to you today to help create opportunities out of what has been, a crisis for some and for many. So let's work together to be really the best stewards of our finances, and that's going to be through homeownership. So here's what we're about to cover. Here's our agenda. We're going to cover information for current homeowners. If you're a current homeowner, what are the things that you can do to help really alleviate some of that, maybe some of the burden? If right now your mortgage is a burden for you, ways to reduce those monthly payments, or maybe if you need to just simply put that on pause. The second item that we're going to cover is for our potential homeowners. If you're not a homeowner, or maybe if you owned a home years ago and are looking to become a homeowner again, what is it that you can do to really achieve that dream? And lastly, this is an opportunity. This market right now, there's opportunity. If you're looking to become an investor and invest in real estate, I'm going to show you what those qualification requirements are. And finally, I'm actually going to leave you with a gift, which is a plan. So for our current homeowners, the first thing I wanted to really talk about is right now with interest rates being so low, you really do have an opportunity to look at ways to lower your monthly payment. Maybe if you're looking to take cash out of your property, or even lower your interest rate, or lower reduce the amount of time that your current mortgage term is. Right now is the perfect time to do that. So the ways to do that is through what we call refinancing. When you refinance your mortgage, if you're a current homeowner, when you refinance your mortgage, you're basically taking out a new mortgage and paying off that first loan. And some of the benefits to refinancing is you can obtain right now with interest rates being so low, and I'm actually going to show you an example a little bit further, but you can look at opportunities to lower your rate, which then would lower your payment. If you're needing to take cash out, if you currently have equity in your home, meaning if the value of your home is more than what you currently owe, that means that you have equity, and the equity can be used to maybe pay off some debt, do a debt consolidation, if credit cards are getting a little bit too burdensome. When we refinance a loan, that means that you basically re-qualify for your mortgage. So it's kind of like, when we complete that application together, what we do is we look at your credit, your income, and your assets. So unfortunately, if your income has been reduced due to, COVID-19, the coronavirus, if you've been laid off or if you've been, reduced hours, then we have another solution for you. But definitely look at refinancing if you're a current homeowner, and let's see if we can reduce your interest rate or reduce the term of your loan to help you to, pay off that mortgage faster, or help you alleviate or really open up your monthly budget on a monthly basis. The second one is, how do I defer my payment? For our families that unfortunately are experiencing some hardship, right now there are times of uncertainty, and I respect that. So the ways to defer your payment there's actually two options. So the first one is to go into or to request a forbearance, and the second one is to request a loan modification. Let's go through the differences between the two. So first, a forbearance is basically and let's be really, this is really important that we go through this. Forbearance is not forgiveness. Okay, that doesn't necessarily mean that your mortgage company, your mortgage servicer, is going to put that mortgage on pause and then not have to worry about that monthly payment. At some point in time, you would have to pay that monthly payment. However, forbearing your mortgage gives you the opportunity to simply place it on pause, place it on hold. Okay. The next one is to look at a loan modification. A loan modification would actually means when they take the current terms of your mortgage and basically reanalyze it. Can they reduce? Is there a way to maybe reduce your rate? Put your mortgage payments on pause for a few months. Can they give you a lower term, or maybe extend your term out just to recalculate that monthly payment? So it's basically a loan modification is kind of like a refinance, but it's a little bit different. The best thing that you can do if you're a current homeowner and if you're experiencing any hardship with your current mortgage is to communicate. Call your mortgage servicer. So I, as a loan officer, I work with clients that are wanting to get into a new mortgage loan. So I would help you. I'm the type of person that would help you if you're wanting to refinance. That's where I would come into play. But if you're looking into possibly doing a forbearance or a loan modification on your current mortgage, the best thing that you can do is call your mortgage servicer. And you can find out who your mortgage servicer is by simply looking at your mortgage statement. Who is it that you pay your mortgage to every month? And look at that and look for that customer service number. They're the ones that would definitely be able to walk you through that process. Make sure before you sign anything, be sure to read through all the paperwork and really understand what are the terms of the forbearance or the loan modification. We're so grateful that these resources are out there right now. The government has done a wonderful job at quickly coming up with solutions, and these mortgage servicing companies have done a great job at really figuring out what are solutions that we can bring to our current homeowners to bring them to really help alleviate some of that financial burden from one of our biggest expenses, which is our mortgage and our housing payment. The good news is that from a credit reporting standpoint, please note that servicers cannot report to the credit agencies when a borrower is on active forbearance or repayment due to the COVID-19 related hardship. So we should not be able to see that on the credit report. And also some other good news is unfortunately, if you were in the foreclosure process, the good thing that has happened through the CARES Act, which is basically the umbrella that all this falls under, is that servicers actually must suspend all foreclosure sales over the next 60 days. So really, we have about another 30-day window where that foreclosure process should have stopped. So If your servicer, if you're going through any type of foreclosure proceeding, make sure that you call and you communicate with your servicer and make sure that they've put that on hold. So again, I cannot stress enough how important it is. If you're going through any financial hardship with your mortgage, be sure to call your servicer. If you're not going through financial hardship and you're a current homeowner, let's look at possibly refinancing to see if there's a benefit to you to refinance your mortgage by lowering your interest rate, lowering your term, or possibly taking cash out of your mortgage. So now that we've gone through a couple of solutions for current homeowners, let's move forward to our potential homeowners. So if you currently don't own a home at this time, there are so many solutions out there. There's so many programs out there that can help you to become a homeowner. So what are the requirements to qualify? So when you're buying a house, whether you're moving up, whether you're moving up, you're upsizing, you're downsizing, or you're buying a home for the first time. When you speak with a mortgage loan officer such as myself, the questions that you'll need to be ready to answer and the types of questions that we will ask are questions regarding your credit, your income, and your assets, okay? So we do have to get a little bit nosy, when we look at your finances. We just want to make sure that we cover all bases and that we ask all questions. So you don't have you don't have any issues once you're pre-approved with being able to get into your home. Buying a home is a very emotional process. It's an emotional journey, and so make sure that you have all your ducks in a row before, and you get that pre-approval before you go out there and purchase your home. So for potential homeowners, building wealth through homeownership is a wonderful, wonderful opportunity. I have personally, one of the best decisions that I made when I was 22 is I sacrificed and I bought my first home. And now that I'm in a later season in life, I was able to really reap the benefits of being a homeowner in my 20s now that I've bought my next home. So speaking of, welcome to my home. This is how we're doing business now, is in our home. So welcome to my home. So now that we've kind of briefly talked about, for potential homeowners, the application process, again, loan officers are going to ask about your credit, your income, your assets. Most importantly, what are your credit scores? The credit score is like the gatekeeper. After we look at your credit score, then we're going to want to look at your credit history. Have you paid on time, and what are your monthly payments? Second would be your income. We're going to want to know, where have you worked the last 2 years, and we would need to be able to document that. So we're going to ask for really important documentation such as tax returns, also pay stubs, which gives us a really good snapshot of how much you're earning. Lastly, assets. The reason why that's important is we want to make sure that you have money available for down payment and closing costs. Now, I want to briefly introduce something to you called the Grant and Down Payment Assistance Programs. Whether you currently have the funds available and you just want to keep them, if you just want to keep those funds set aside in case of an emergency, or if you've had to go through a lot of your savings because of the coronavirus, then there are solutions out there to help you to buy a home. So please don't feel like you have to have thousands in the bank in order to buy a house. That's not true. So to briefly introduce, and I do understand that our audience, that you're not just based in Houston. We're looking at, today we're able to really connect with women from across the state of Texas and nationally as well. So I'm not going to go into too much detail about the local programs, but please know that there are city, county, and state programs available where you live at to help you to buy a home. In Texas, here's an example of a program in Texas. The Home Sweet Texas Home is a 3 to 5% grant. What that means is, let's say that you're borrowing $200,000. Let's say that that is going to be your projected mortgage amount. That grant would be anywhere between 3 to 5%. So that means $6,000 to $10,000 to help you to buy a home. That money can be used for down payment and or the closing cost. Here in Texas, here more specifically in the Harris County where I live, some of the income limits, I want to bust a misconception that the programs are only for lower income families. What I love about this type of program, it's it really helps a lot of families in whatever season of life you're in as far as your income and your career. So here's an example with the Harris County where I live and where I do business. You can earn as much as 87,000, close to right under 88,000, and not over qualify for this program. The sales price limit, it would vary by county, so check with your local lender if you're not in Houston or in Texas to see what the income and the sales price limits are. But here's an example. In the Harris County, the sales price limit is 298,000. That's a lot of, that's a big home. That's a lot of house. So just know that there's programs out there. Don't let your loan officer, tell you that there's nothing out there to help you. There are programs. Make sure you work with a trusted lending professional that understands how to work with the programs. And lastly, so that we can move on, is the MCC program, the Mortgage Credit Certificate. It's actually a tax credit program. So it doesn't give you money up front, but it does help you with a tax benefit for the life of the loan. We like to call it the gift that keeps on giving. So let's move over to our next slide. Right now, earlier I mentioned briefly that interest rates are really, really low. Let me share an example. So here on the left, we have interest rates of 4.5%. That was about 6 to 12 months ago. The principal and interest payment was 12, and for a house for $260,000, just as an example. Down payment 3.5%. That would be a typical FHA mortgage. Mortgage interest rate of 4.5%. Your principal and interest payment would be $1,271 a month. Add on your homeowner's insurance and your property taxes, which are what we consider your escrows, plus your mortgage insurance. That means that would give you a monthly payment of $2,202, and that's at an interest rate of 4.5%. Let's move over to what interest rates are like right now, which is closer to 3.25%, give or take on any market day. Let's run through these numbers and let's look at that bottom dollar. $2,023. That's a monthly savings of $179. Do you know what you can do with $179? That's half of my grocery budget for the month. That's a huge savings. So that's how much the current lower interest rates are really helping families to become homeowners and to save on a monthly basis. So let's move on. Lastly, so currently we have touched base for our current homeowners, solutions if you're facing financial hardship, or if you simply want to look at lowering your rate or monthly payment. We've touched base on, we've connected with our potential homeowners. If you're looking to buy a home, what is that process? And, and really looking at what are the programs that are out there that can help you. Lastly, let's really touch on if you're looking to invest. Right now is a great opportunity. Folks are looking to sell. The market in Houston, where I'm at, is hot. Families are selling, families are buying, things are moving along. So if you're looking to invest, I wanted to share just briefly, if you want to become an investor, if you want to take this crisis and convert it into an opportunity and become an investor, meaning you want to buy rental properties. If coulda, shoulda, woulda, I wish I could have started when I was in my 20s to buy investment properties. I would have really grown a lot of wealth by now through investing in real estate. But so looking at the qualification requirements, the credit score requirements, we're looking at currently at about a 680 credit score. After COVID-19, that's probably going to relax some. Oftentimes, cash is king whenever you're buying a rental property. So oftentimes you do need a little bit of a larger down payment, so about 20% of the sales price. And lastly, you will probably need a couple of months of reserves just in case something happens and renters move out of the property. You want to have some money set aside so that you can really have that, those funds set aside in case of that emergency, because things do happen. As we can see now, the market does change. So lastly, I want to leave you with a gift. I'm going to end with a gift. We can say we want to do something and have that goal and see that vision, but unless we write it down, unless we have a plan, it's just a goal. It's just a dream. So I personally, let's be transparent here. I have a goal to lose weight. I want to be healthier. I want to be a healthier version of myself at the end of 2020 than when I started at the beginning of the year. So I have written down, I walk a mile every day. I've started lifting weights. I started eating healthier. I started drinking more water. I have put things into place that are helping me to achieve that goal. So I want to end with what's something that's called the NARIP 10. These are 10 daily principles, and I take a screenshot. I'm happy to email this to you or text it to you, but these are 10 principles that we strive to live by. Mentioned earlier, I'm the immediate past president of NARIP Houston. It's the National Association of Hispanic Real Estate Professionals, and these are 10 principles that we try to live by, and it's not just for real estate professionals, it's for anyone. I'm going to just highlight just a handful. Number one, have a mature understanding of wealth and prosperity, because the ones with the most toys usually loses. Number three, live below your means and be ready for the next recession, because downturns are a regular part of the economic cycles. Number eight, be physically fit, because wealth without health is meaningless. And lastly, number 10, to end this, be active in the lives of your family and children, because familia is central to who we are and nothing will motivate us more. So I just wanted to take an opportunity to say thank you. Thank you for having me, Ivette. Thank you to Power on Heels Fund. Here's my contact information. Please use me as a resource. I'm here to serve. Thank you.
Veronica, thank you so much for all that wonderful information and all the resources and the special gift. Thank you for your time and for gifting us all these wonderful things today. Stay connected with the Power on Heels Fund, Inc. on all our social media platforms and visit our website at poweronheelsfund.org. Stay informed and plugged in on all our efforts and all our events. The COVID-19 Financial Summit Masterclasses are filled with industry experts and change agents sharing information to help you create smart financial strategies during these difficult times. Gracias and thank you for joining us. And remember, you are Power on Heels.